Question 1. Cyber risk and threat landscape. Which of the following best describes the primary purpose of a risk assessment in cyber insurance? A. To assess the financial stability of the insurance company. B. To evaluate the probability and impact of cyber risks to the insured organization. C. To define the limits of a cyber insurance policy. D. To establish the claims process for future breaches. Answer: B. Explanation. A risk assessment in cyber insurance is essential for evaluating the probability and impact of potential cyber threats on the insured organization. This helps insurers determine the level of coverage needed and assess the overall exposure to cyber risks. Unlike options A, C, and D, which focus on unrelated aspects, such as company stability or claims processes, the primary purpose is to understand and quantify the risks faced by the insured. Risk assessments often involve evaluating the insured's security measures, identifying vulnerabilities, and estimating the potential impact of the breach. Question 2. Scenario-based question. Sarah, the Chief Information Officer (EO) of a large financial services company, has recently implemented a new cyber insurance policy. The policy covers first-party costs, including data breach expenses, business interruption, and digital asset restoration. After a ransomware attack causes significant downtime, Sarah is concerned about the financial impact on the company. Which of the following actions should Sarah take first to ensure the company receives coverage under the new policy? A. Immediately notify the insurer and document the incident for claims purposes. B. Wait for the system to be fully restored before notifying the insurer. C. Contact the media to make a public announcement about the breach. D. Ignore the breach and focus on restoring operations before filing any claims. Answer A. Explanation. In the event of a cyber attack, it is critical to notify the insurer as soon as possible. According to standard cyber insurance policies, the insured is usually required to report incidents within a specified period, often within 48 hours. Proper documentation of the breach is also crucial to support the claims process. Option B delays the reporting, which could lead to complications in the claims process. Option C is not advisable since public disclosures should follow regulatory guidelines, and option D may result in missed deadlines or non-compliance with policy terms. Therefore, Sarah's first step should be to notify the insurer and begin documenting the incident. Question 3. Cyber liability coverage. Which of the following statements best describes the liability coverage provided under third-party cyber insurance policies? A. It covers only the insured's own data breaches, not those affecting others. B. It provides coverage for the insured's liability for data breaches and privacy violations affecting third parties. C. It only covers damages resulting from unauthorized access to the insured's internal network. D. It covers losses related to employee negligence but not third-party violations. Answer B. Explanation. Third-party cyber insurance coverage primarily provides protection against liability for data breaches, privacy violations, and other cybersecurity incidents that affect third parties. This includes lawsuits from clients, customers, or other stakeholders who may have been affected by a breach. Option A incorrectly suggests that third-party liability is limited to the insured's own breaches. Option C misrepresents third-party coverage by limiting it to internal network breaches. Option D incorrectly states that the policy does not cover third-party violations, which is a key feature of third-party cyber liability coverage. Question 4. Cybersecurity best practices for insureds. Which of the following is considered a key cybersecurity best practice that insured organizations should implement to reduce the likelihood of a data breach? A. Relying solely on firewalls to prevent all external attacks. B. Implementing multi-factor authentication for all employees and systems. C. Limiting employee access to only the most sensitive data. D. Avoiding any collaboration with third-party cybersecurity providers. Answer B. Explanation. Implementing multi-factor authentication (MFA) is a widely recognized cybersecurity best practice. MFA requires users to provide 2 or more verification factors to gain access to systems, which significantly reduces the risk of unauthorized access due to compromised passwords. Option A, relying solely on firewalls, is insufficient because firewalls alone cannot prevent all types of cyber threats. Option C is not a best practice as it can hinder business operations if access to data is unnecessarily restricted. Option D, avoiding collaboration with third-party cybersecurity providers, would limit the organization's ability to enhance its security posture by leveraging external expertise. Question 5. Policy terms and conditions. Which of the following exclusions is most commonly found in standard cyber insurance policies? A. Losses arising from intentional acts of the insured. B. Business interruption caused by natural disasters. C. Coverage for social engineering attacks. D. Losses from cyber incidents related to the insured's internal negligence. Answer. Explanation. Most standard cyber insurance policies exclude coverage for losses that result from intentional acts of the insured, such as deliberate data breaches or fraud. These exclusions are meant to ensure that insurance does not cover actions where the insured has directly caused harm or violated the terms of the policy. While some policies may cover social engineering attacks, option C, they typically come with limitations or sublimits. Option B is unrelated to cyber coverage, as business interruption caused by natural disasters is typically covered under property or casualty insurance. Option D, negligence, is generally not excluded unless it specifically involves gross negligence. Question 6. Regulatory environment and legal considerations. Under the California Consumer Privacy Act (CCPA), which of the following actions must a business take after a data breach that exposes personal information? A. Provide affected individuals with free credit monitoring for a minimum of 1 year. B. Notify the California Attorney General if more than 500 individuals are affected. C. Only notify affected individuals if the breach was caused by a third party. D. Wait until all the damages have been calculated before reporting the breach. Answer. B. Explanation. Under the CCPA, businesses must notify the California Attorney General within 30 days if the breach affects more than 500 California residents. This notification is required regardless of the cause of the breach, as the focus is on the number of affected individuals. Option is incorrect, as the CCPA does not mandate credit monitoring for all breaches, though it may be required under other laws. Option C is incorrect because notification is required regardless of the cause of the breach. Option D is also incorrect, since the breach must be reported immediately and not after damages are fully calculated. Question 7. Cyber insurance underwriting. Which of the following factors is NOT typically considered during the underwriting process for cyber insurance? A. The insured's historical claims experience. B. The insured's current cybersecurity practices and measures. C. The insured's financial stability. D. The insured's geographic location. Answer. D. Explanation. During the underwriting process for cyber insurance, factors such as the insured's historical claims experience, option A, current cybersecurity practices, option B, and financial stability, option C, are typically considered to assess the overall risk. However, the insured's geographic location, option D, is generally not a direct factor in underwriting unless it directly impacts the risk exposure. E.g., operating in a high-risk cybercrime region. Understanding the insured's risk management measures and previous incidents is more critical in determining the appropriate premium and coverage. Question 8. Claims management in cyber insurance. When handling a cyber insurance claim, which of the following is most important for the insurer to verify before making a payment? A. The insured's company's size and industry type. B. The cause of the cyber incident and its impact on business operations. C. The number of employees involved in the incident. D. The insured's willingness to accept the settlement offer. Answer. B. Explanation. The cause of the cyber incident and its impact on business operations are critical to verifying the validity of the claim and determining the scope of coverage. The insurer must confirm that the event is covered under the policy, e.g., data breach, business interruption, etc., and assess the financial loss to ensure that it aligns with policy terms. Option A, while relevant for underwriting, does not directly affect the claims process. Option C is irrelevant because the number of employees involved does not determine coverage. Option D is not a key factor in claims verification, as the insurer must independently assess the situation before proceeding. Question 9. Emerging trends and future of cyber insurance. How might the growth of Internet of Things devices impact cyber insurance policies? A. It will likely decrease the need for cyber insurance due to enhanced security. B. It will result in higher premiums due to increased risk exposure from vulnerabilities. C. It will lead to a reduction in coverage limits for all insured organizations. D. It will lead to more standardized policies with less customization for specific industries. Answer. B. Explanation. The proliferation of IoT devices introduces new vulnerabilities, making organizations more susceptible to cyber attacks. These devices often have weak security measures, which increases the overall risk exposure. As a result, insurers may raise premiums to cover the heightened risk. Option A is incorrect, as IoT devices increase risk rather than decrease it. Option C is incorrect because the growth of IoT does not necessarily result in lower coverage limits. Option D is also incorrect, as the unique risks associated with IoT devices may lead to more customized, not less, policies for certain industries. Question 10. Incident response and claims process. Which of the following steps is NOT part of the incident response lifecycle in a cyber insurance claim? A. Containment and eradication of the cyber threat. B. Collection of evidence and documentation. C. Public disclosure of the incident to the media. D. Notification of the insurer and other relevant parties. Answer. C. Explanation. Public disclosure of the incident to the media. Option C is not part of the incident response lifecycle in terms of claims processing. What communication with affected parties and regulatory bodies is essential? Media disclosure is typically handled by the organization's public relations team, often after other critical steps such as containment, evidence collection, and insurer notification. The other steps, containment, evidence collection, and insurer notification, are fundamental components of the incident response lifecycle, ensuring that the breach is addressed and that the insurer is prepared for the claims process. Question 11. Cyber risk and threat landscape. Which of the following cyber threats is specifically associated with the manipulation of an organization's software or hardware to gain unauthorized access or cause harm? A. Phishing. B. Malware. C. Insider threats. D. Social engineering. Answer. B. Explanation. Malware refers to malicious software designed to disrupt, damage, or gain unauthorized access to computer systems or networks. It can include viruses, ransomware, spyware, and trojans, all of which can manipulate software or hardware. Option A. Phishing involves tricking individuals into revealing sensitive information, not manipulating software. Option C. Insider threats involves employees or contractors misusing their access, but not necessarily software manipulation. Option D. Social engineering is about manipulating people to divulge confidential information or perform actions. Question 12. First-party coverage. Which of the following would be covered under cyber insurance policies? First-party coverage. A. A lawsuit from a third party affected by a data breach. B. Data breach expenses and business interruption loss. C. Legal fees for defending the insured in a third-party lawsuit. D. Liability for breaching privacy laws such as GDPR or CCPA. Answer. B. Explanation. First-party coverage in cyber insurance typically covers direct losses that the insured experiences due to a cyber incident, such as data breach expenses and business interruption loss. Option A pertains to third-party coverage, as it involves claims made by others affected by the breach. Option C is also related to third-party coverage, as it covers the cost of defending the insured against third-party claims. Option D relates to third-party liability for privacy law breaches, which would be covered under third-party coverage. Question 13. Claims made versus occurrence-based policies. Which of the following statements accurately describes the difference between a claims-made policy and an occurrence-based policy in cyber insurance? A. A claims-made policy only covers incidents that occur during the policy period and are reported after the policy has expired. B. An occurrence-based policy covers incidents that occur during the policy period, regardless of when the claim is reported. C. A claims-made policy does not have any retroactive coverage. D. An occurrence-based policy covers claims made during the policy period, even if the incident occurred before it started. Answer. B. Explanation. In a claims-made policy, the policy covers incidents that occur and are reported during the policy period. In contrast, an occurrence-based policy covers incidents that occur during the policy period, regardless of when the claim is made. Option is incorrect because a claims-made policy covers incidents that occur and are reported while the policy is active, even if it extends past the expiration. Option C is incorrect, as claims-made policies can have retroactive coverage. Option D describes a claims-made policy, not an occurrence-based one. Question 14. Risk assessment in cyber insurance. What is the primary purpose of a cyber risk assessment during the underwriting process for cyber insurance? A. To evaluate the likelihood of future claims. B. To determine the insured's annual premiums based on revenue. C. To assess the insured's current cybersecurity measures and vulnerabilities. D. To identify the insured's financial stability. Answer C. Explanation. The primary purpose of a cyber risk assessment during underwriting is to assess the insured's current cybersecurity measures, vulnerabilities, and potential risk exposure. This helps insurers evaluate the potential risks they are taking on and determine the appropriate coverage and premiums. Option A. Evaluating future claims is not the focus. Underwriting focuses on risk at the time of application. Option B is inaccurate, as premiums are based on the level of risk, not just the insured's revenue. Option D is also relevant, but it's secondary to evaluating cybersecurity practices. Question 15. Massachusetts data privacy laws and regulations. Which of the following requirements is specified in Massachusetts data security regulations? 201 CMR 17.0 for businesses that store personal data of Massachusetts residents. A. Businesses must notify affected individuals of data breaches within 60 days. B. Businesses must implement encryption for personal data stored on laptops or other portable devices. C. Businesses must register with the Massachusetts Attorney General's office before collecting personal data. D. Businesses must offer identity theft protection services to affected individuals at their expense. Answer B. Explanation. Massachusetts data security regulations 201 CMR 17.0 require businesses to implement certain measures to protect personal data, including encryption of personal data stored on portable devices such as laptops. Option is incorrect because the law requires notification within a reasonable time frame, generally within 30 days. Option C is not a requirement of the regulations. Option D is also not a requirement, and while businesses may offer identity theft protection, they are not required to do so under 201 CMR 17.0. Question 16. Cyber insurance underwriting. When evaluating a potential client's business continuity PAN (BCP) and disaster recovery PAN (ERP) during cyber insurance underwriting, which of the following aspects is most important for insurers to assess? A. The business's history of past cyber incidents. B. The cost of implementing BCP and DRP protocols. C. The extent to which BCP and DRP plans include incident-specific recovery strategies. D. The financial statements of the business. Answer C. Explanation. Insurers focus on the extent to which the business's BCP and DRP plans include specific recovery strategies for different types of incidents, including cyber attacks. This helps insurers assess how well prepared the business is for handling cyber incidents and minimizing losses. Option is relevant, but it is secondary to evaluating current preparedness. Option B is not as critical. The plans should focus on effectiveness rather than cost. Option D, while important for financial stability, does not directly impact the BCP or DRP evaluation. Question 17. Network security liability. Which of the following scenarios would most likely be covered under a cyber insurance policy's network security liability coverage? A. A business's website is defaced by a hacker, causing damage to its reputation. B. A business loses its customers' personal data due to an internal employee's negligence. C. A customer sues the business for failing to protect their data during a cyber attack. D. A business is sued for violating privacy laws under GDPR. Answer C. Explanation. Network security liability coverage typically covers third-party claims for damages arising from a business's failure to protect its network and data from cyber attacks. In this case, a customer suing the business for failing to protect their data during a cyber attack would fall under network security liability. Option A pertains to a reputational issue, not a liability claim. Option B is more related to the insured's internal policies and not a third-party liability. Option D is covered under privacy liability coverage, not network security liability. Question 18. Cyber insurance claims process. Which of the following is NOT typically required in the documentation process during a cyber insurance claim? A. Incident report detailing how the breach occurred. B. Evidence of the insured's compliance with cybersecurity protocols. C. Proof of public disclosure of the breach to the media. D. List of affected individuals and data types involved. Answer C. Explanation. Proof of public disclosure to the media is not typically required for a cyber insurance claim. While communication with affected individuals and relevant authorities is important, disclosure to the media is handled separately by the organization's public relations team. Option A, incident reports. Option B, compliance with protocols. And option D, documentation of affected individuals and data are all critical for substantiating the claim. Question 19. Privacy liability. Which of the following laws imposes penalties on organizations that fail to properly secure personal data and protect consumer privacy? A. Gramm-Leach-Bliley Act GBA. B. Federal Information Security Modernization Act FISMA. C. California Consumer Privacy Act CCPA. D. Health Insurance Portability and Accountability Act HIPAA. Answer. C. Explanation. The California Consumer Privacy Act CCPA imposes penalties on organizations that fail to adequately secure personal data and protect consumer privacy for residents of California. It gives consumers the right to request their data and demand that it be deleted. Option A, the GLBA, relates to financial institutions' obligations to protect consumers' private financial information, but it does not directly impose penalties for data breaches. Option B, FISMA, governs federal agencies and contractor security practices, but does not directly relate to consumer privacy. Option D, HIPAA, governs healthcare information, but it is not focused on consumer privacy in general. Question 20. Cyber insurance case studies. Following a major ransomware attack that crippled a company's network and disrupted its operations, the company's cyber insurance policy paid for most of the recovery costs. Which of the following could be considered a key factor in determining the amount the insurance company will pay? The company's previous relationship with the insurance provider. B. The company's internal security measures and their role in preventing the attack. C. The level of public impact of the attack. D. The financial status of the insurance provider. Answer. B. Explanation. A company's internal security measures and their role in preventing the attack are a critical factor in determining the payout amount. Insurers will assess whether the insured followed best practices in cybersecurity and whether lapses in security contributed to the severity of the breach. Option A, the insurer's relationship with the company does not directly impact the claims process. Option C, while relevant to reputation, is not a determining factor in the claim payout. Option D, the financial status of the insurance provider has no impact on the claim payout, which is based on the incident specifics. Question 21. Ransomware coverage. Which of the following is typically covered under a cyber insurance policy's ransomware coverage? A. The cost of hiring a public relations firm to handle the crisis. B. The cost of a ransomware payment to the cyber criminal. C. Legal fees associated with a lawsuit filed by a customer due to the breach. D. The cost of upgrading outdated hardware after the attack. Answer. B. Explanation. Ransomware coverage typically covers the cost of paying the ransom to cyber criminals in cases where it is deemed necessary to regain access to encrypted data or systems. Option A. The cost of hiring a public relations firm may be covered under crisis management coverage but is not part of ransomware coverage. Option C, legal fees from customer lawsuits would fall under liability coverage. Option D, hardware upgrades is unrelated to ransomware recovery. Question 22. Cybersecurity and data breach response. In the event of a data breach, what is typically the first step a business should take according to industry best practices? They publicly disclose the breach to the media. B. Notify affected individuals of the breach. C. Contain and investigate the breach to understand its scope. D. Immediately pay the ransom to recover data. Answer. C. Explanation. The first step in response to a data breach is to contain and investigate the incident to understand the scope of the breach and prevent further damage. This includes identifying the cause of the breach and securing systems. Option A. Public disclosure happens after containment. Option B. Notifying affected individuals occurs after investigating the scope. Option D. Paying a ransom is not recommended as an immediate action. Question 23. Cyber liability insurance exclusions. Which of the following would most likely be excluded from coverage under a typical cyber liability insurance policy? A. Costs for restoring lost data following a cyber attack. B. Loss of income due to a network outage. C. Cybercrime involving employee fraud. D. Damage caused by a failure to comply with industry cybersecurity regulations. Answer. D. Explanation. A typical cyber liability insurance policy may exclude coverage for damages caused by a failure to comply with industry-specific cybersecurity regulations or legal requirements, while the policy may cover data restoration, lost income due to outages, and cybercrime involving employee fraud. Compliance-related failures are generally excluded. Question 24. Social engineering fraud coverage. Which of the following is typically covered under a cyber insurance policy? Social engineering fraud coverage. A hacker breaching a company's firewall and stealing sensitive data. B. An employee being tricked into wiring funds to a fraudulent account by an attacker posing as a vendor. C. Losses due to a failure to encrypt customer data. D. Legal expenses related to defending a lawsuit filed by a competitor. Answer. B. Explanation. Social engineering fraud coverage typically covers losses resulting from employees being tricked by cyber criminals into performing fraudulent actions, such as wiring funds to fraudulent accounts. Option A refers to a hacking incident, which would be covered under network security coverage. Option C refers to a lack of encryption, which might fall under data breach coverage. Option D is not related to cybercrime. Question 25. Cybersecurity audits for insurance premiums. How can a cybersecurity audit impact the premiums of a cyber insurance policy? A. It can increase premiums by highlighting vulnerabilities in the insured system. B. It can lower premiums by demonstrating that the insured is taking proactive cybersecurity measures. C. It does not affect premiums, as audits are separate from insurance coverage. D. It automatically results in coverage being denied if vulnerabilities are found. Answer. B. Explanation. A cybersecurity audit can lower premiums if it demonstrates that the insured has taken effective, proactive steps to secure their systems, reducing the risk of a cyber incident. Insurers may offer discounts or low premiums for businesses that have strong cybersecurity practices. Option A is incorrect because vulnerabilities typically lead to higher premiums, not a direct increase due to the audit itself. Option C is incorrect. Audits often affect premiums. Option D is incorrect because vulnerabilities may not necessarily lead to coverage denial, but could lead to higher premiums or changes in coverage terms. Question 26. Privacy violations in cyber insurance. Which of the following is most likely to trigger coverage under a cyber insurance policy's privacy violations section? A. A company's website is hacked and customer credit card information is stolen. B. An employee accidentally sends an email with customer data to the wrong recipient. C. A company loses a hard drive containing sensitive customer data due to negligence. D. A company fails to comply with GDPR regulations regarding customer data storage. Answer. B. Explanation. Privacy violation coverage typically covers incidents where personal or sensitive information is exposed due to negligence, such as sending an email with customer data to the wrong recipient. Options and C relate to data breaches and may be covered under network security and data breach sections, respectively. Option D, failure to comply with GDPR, is generally a regulatory issue that may be excluded from coverage. Question 27. Coverage limits in cyber insurance. Which of the following is generally true about the coverage limits in cyber insurance policies? A. Coverage limits are fixed and cannot be adjusted once the policy is in effect. B. Coverage limits can vary based on the insured's risk profile, business size, and industry. C. Cyber insurance policies always offer unlimited coverage for data breaches. D. Coverage limits are automatically increased every year without additional cost. Answer. B. Explanation. Coverage limits for cyber insurance are often adjusted based on the insured's specific risk profile, business size, and industry. Larger businesses or high-risk industries may face higher premiums and larger coverage limits. Option is incorrect because limits can often be adjusted. Option C is incorrect because cyber insurance policies do not typically offer unlimited coverage. Option D is also incorrect. Limits are not automatically increased. Question 20. Third-party coverage in cyber insurance. What type of losses does third-party coverage in a cyber insurance policy typically cover? A. Losses incurred directly by the insured company due to a cyber attack. B. Legal and financial expenses resulting from a data breach affecting customers or partners. C. Losses associated with internal employee misconduct. D. Damage to the insured's physical infrastructure due to a cyber attack. Answer. B. Explanation. Third-party coverage typically covers legal and financial expenses resulting from a data breach that affects customers, clients, or business partners. It may cover lawsuits and regulatory fines arising from the breach. Option A refers to first-party coverage. Option C pertains to employee misconduct and would be addressed under other insurance policies. Option D refers to damage to physical infrastructure, which is not typically covered under cyber insurance. Question 29. Coverage for business interruption. Which of the following would be covered under the business interruption section of a cyber insurance policy? A. Loss of revenue due to a cyber attack that temporarily shuts down the company's online operations. B. Legal fees associated with defending against the third-party lawsuit. C. Cost of hiring a PR firm to manage the media fallout from a breach. D. Expense of upgrading software to prevent future cyber attacks. Answer A. Explanation. Business interruption coverage under a cyber insurance policy typically covers lost revenue and additional expenses resulting from a cyber attack that disrupts business operations. Option B is related to third-party liability coverage. Option C is part of crisis management coverage, and Option D pertains to prevention and is not covered under business interruption. Question 30. Claim notification in cyber insurance. In a cyber insurance policy, what is the typical time frame within which an insured must notify the insurer about a potential claim? A. 10 days, B. 30 days, C. 60 days, D. 90 days. Answer B. Explanation. Most cyber insurance policies require the insured to notify the insurer of a potential claim within 30 days of becoming aware of the incident. Option A is too short. Option C and D are generally longer than required. Timely notification ensures the insurer can begin the claims process and assist with incident response.